Mike, I want to go back to something that Austin Goolsbee said to you about this unemployment report, this payrolls report. He said, 1 month is not a trend, but it's not a good month if you've got several months like that. That would be concerning, a concerning spot for the labor market. If you peel back sort of the layers of this report, is this a one-off for a host of reasons, or is this the start of a bigger trend?
Well, it's hard to know, but it doesn't look good on the surface. When you look at the numbers, you look at the overall decline in jobs, a lot of it was in healthcare, which had been the only sector that was really hiring. And also part of that was because of a strike against Kaiser Permanente out in the West Coast with nurses on strike. But even if you add them back in, healthcare hiring was very weak. So if the one driver of employment has slowed down, then you may have trouble ahead. That's the big question going forward. Is this a one-off? Is this showing that things are going to remain weak? And I think what Fed officials are saying is the labor market is weak, and some of us are worried about whether or not we should do something about it, while the inflation hawks are looking at the oil prices and saying, you know, we're hopeful that inflation will go down, but we don't know how long this war is going to last, so we don't know how long oil prices are going to remain elevated, so we've got to kind of sit on the sidelines for the moment.
All right, we want to talk more about that in a moment, but Mike, I want to get to Kevin Hassett, who spoke on Bloomberg TV earlier, of course, the White House National Economic Council Director. He said the poor February jobs report was down in part to crazy weather, though, as we noted, the number of people unable to work last month wasn't out of line with historical averages. He also said that revisions to population figures are making month-to-month changes more volatile. And so he says it's important to average things out, that this was still a strong increase in payrolls. Do you agree?
I would say that he is talking his book and trying to make things sound better than they are for the administration. Weather didn't really have anything to do with what we saw in the labor market report, and the BLS sort of points that out. 228,000 people who couldn't go to work because of weather was not substantially different from what we saw in January, and it's about what you would expect for this time of year. So that's not really an excuse. We do have the changes to the population survey, but that really isn't making a major difference in the numbers that we got this month because they split it up. We got a new population control number, but the seasonal adjustment factors and the adjustments to hiring were in the January numbers. So really, you kind of have to take this report at face value. Like I said, it may not sustain, but you really can't wave it off.
And I just want to be clear, Hassett did say, speaking on TV earlier, it's important to average things out, and there was still a strong increase in payrolls for January. You just talked about the January number. We got a lot of questions.
Yeah, it raises the question about what the Federal Reserve does on March 18th and what the Federal Reserve does at the end of April 29th, for that following meeting. Mike, does it change the picture at all?
Well, we're not sure if it changes the picture for April. That's going to really depend on what happens with the war and with energy prices and if they stay elevated. The March 18th, they're going to sit on their hands because you have a smaller minority, maybe Mickey Bowman, Chris Waller, and definitely Stephen Myron, who think that you should be cutting rates more to get ahead of the problems in the labor market. But the people who are worried about inflation have an argument that we can't really move because we don't know what's going to happen with this, and we don't want to get inflation established in the economy. We don't want inflation expectations to start to rise when people go to the gas station and see their gas prices going up quite a bit. So take that one off the table, and then let's wait and see on April. April is going to be Jay Powell's last meeting as chair. So that might argue against doing anything dramatic. But if we do see a dramatic change in the inflation picture, you could see it.
So you just got me thinking about the Warsh confirmation process. Does that mean that Warsh gets confirmed by the meeting after April 29th?
Well, we don't know. They just sent his nomination up yesterday to the Senate Banking Committee. They've got to schedule a hearing, and then there's this whole Tom Tillis not going to let anybody through while this investigation into Jay Powell is underway thing. So they've got to get that out of the way, and it isn't clear exactly how they do that. But if for some reason Kevin Warsh is not confirmed, then Powell would stay on the job as a governor, and the Open Market Committee would likely just reelect him as chairman of the Open Market Committee. They don't even really need to do that because they elected him for this whole year. So nothing would really change, but we don't have another meeting after the April meeting until later in June. So there's still a lot of time between now and then for Warsh to get confirmed and be in place for what would be his first meeting.
Hey, Mike, you've been having lots of conversations with Fed officials. Is there a common narrative or something interesting in terms of the gaps between what you're hearing? And I'm just curious, is anybody saying stagflation?
Well, Austin Goolsbee was saying stagflation, and that's been a result of previous energy crises. Now, is this a crisis? Javier Blas, our columnist, our brilliant oil columnist, was pointing out this morning that if you take a chart of oil prices and then move it out, expand the time period, you'll see that this really isn't that big a move for oil these days, that we've seen bigger moves in recent years. And so it's not a crisis yet. If it continues, then that could be a crisis. And as Tim was saying at the top of the show, oil gets into all kinds of other products. And if it gets into those products, then prices go up, then maybe economic activity slows. But at this point, it's not likely that we're going to see stagflation, but it's a danger that the Fed is going to talk about or mention just to let people know they're on the case, they're watching this.